It's Monday, it's new week, and you are listening to the StockInvest.us podcast for week 41. In this week's podcast, which will be a very short one, you will hear that I think it will be a red week, and I will give you the reasoning why. We will also, at the end of the podcast, as always, look at possible trading candidates which can be traded this week in hope of making some profits. First, and as always, you will have to listen to the disclaimer. I will be back with a short market insights before we will head to the trading tips.
Hello everyone. Welcome to the StockInvest.us weekly stock and crypto podcast. The podcast is hosted by StockInvest.us co-founder and Golden Star Signal inventor, Jim Stromberg, who has been actively trading since 1996. If you are watching us on YouTube, make sure to hit like and notification bell so you will be first to know when we post a new video. This podcast is also available on Spotify, Apple Podcasts, Anchor, and other audio sources. Ensure you listen to the entire podcast so you don't miss out on some key tips needed for this week's strategy.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
This week's podcast will be a very short one, as the original podcast I made for you crashed while rendering. So I was forced with the choice either to skip this week's podcast or make a super short follow-up. So we'll do this, we'll make a super short follow-up. But first, let's remind last week I told you I thought it would be a red week. I argued that statistically it should be a green week, but I gave you some reasoning why I thought it would be a red week and even a possible market crash. And Friday really looked like a crash because Nasdaq was down 3.8%. But a good Monday, a good Tuesday, and even the Wednesday and Thursday made an overall week for Nasdaq green. Nasdaq was up 0.73% week over week last week. And Dow Jones almost 2%. But it's a new week and we have to figure out, will it be a green or a red week? As usual, do the following: look at the fundamentals and then have a quick look at the chart before I try to decide what I think will happen this week. And what are the things to look out for this week? Well, on Thursday there will be consumer price index number. I do not expect these to be high. I actually expect the consumer price index to fall a little. The reason for this is that energy, and I refer to oil in this case, was cheaper in the late summer and early fall September, and I think this will affect the general numbers. Energy is a huge part of the inflation numbers, and since oil was traded much lower in September than earlier in the year, I think that these numbers could be somewhat okay. I know the overall expectation is that the 12-month United States will be around 8.3, 8.4, down from 8.7. And I think most likely this will be correct. If the numbers come in higher than this, the market will fall very heavily. If they come in much better than this, hard to say, but market can react very positively. But in general, the market expects more or less the same like I did. The inflation will fall a little bit for September. However, we are not done with the inflation yet because energy prices is again going up. And as I told you in last week's podcast and even the podcast before that, I think oil is the right place to be. And oil was up almost 10% last week, $9 to $92. After OPEC said that they will cut production. And the reason why they will cut production is because they think that we are heading for an economic slowdown and the consumption of oil will go down. When exactly that will happen, it will happen, it's already happening, but exactly when it will come into place is a bit hard to say, as we are approaching winter and energy will be a huge problem in Europe. But OPEC Plus says that the reasoning to cut is that they do not want a huge fall in oil prices, a sudden huge fall in oil prices due to less consumption of oil. We will see how it goes. My bet is that oil will continue to be strong and even go for all-time high. Will I be correct? We'll just have to see as the winter unfolds. But right now oil is trading at 92, and of course that made Chevron do very well last week, up 13%, but we'll get back to that in the trading tips. And all other oil stocks, as I told you, would do good, did do good. Other than the consumer price index numbers, there will be some work numbers and different numbers, but nothing really special. What you should pay attention to is Ukraine, because as I mentioned in last week's podcast, now you should expect more tension in Ukraine. And there was a sabotage on the bridge to Crimea, which Russia responded today by bombing several cities in Ukraine. And it might just be a question before they use smaller tactical nuclear weapons. Hopefully this will happen, but if this happens or there will be an increase in the conflict, you can just expect markets to fall very hard. So last week's argument still stands and is some of the reasoning why I think we are heading for yet a red week. Other than this, there will be some quarter results this week. It will be PepsiCo on Wednesday, and there will be BlackRock, a very interesting company, BlackRock, investment company. On Thursday, we will have Morgan Stanley and JP Morgan on Friday, along with some other ones, but nothing really special. What you can pay attention to is, of course, the future statements, because they will say, as I told you many times over, the forward outlooks are not very good. Most companies, we saw this with FedEx, we've seen it with several others, are pretty sure that we're heading for a very, very hard recession. At best case, a hard landing. Anyway, we will have to take some pain forward. But markets are expecting a lot of these, so these are not major reasons why stock market should fall forward. The reason I think the stock market will fall forward is because Nasdaq is balancing on the 10,500 support. Technically, we know there is a very negative sentiment, and if this is broken, you can expect much harder fall as more people throw in their towels after losing a lot the last year. Nasdaq was up at 16,000 points, is now trading around 10,600. You can do the math. But some has really lost a lot of money. Gold, which we will also always mention in the podcast, is 1,700, up $28 last week. I think gold will just continue upwards. Should you invest into gold companies? Gold will not be as good as oil in my opinion, but still there should be some room. Usually when the interest rates go up, and interest rates are going up, and they will go much more up than this, in order to fight the inflation, gold usually go down. The reasoning why I think gold will continue up is because, as I mentioned before, the state the world is in right now. Dollar is very high, and there is reason to believe that the dollar at some point will fall back, and a few other things like crypto, and of course the war and the possible conflict with Taiwan, the grouping between East and West, make me believe that gold will be still considered safe haven, and that we'll see a new influx of money into gold. So my expectation is that gold will continue upwards, but we are still far behind previous high. So we will just have to wait and see. The 10-year treasury yield is up at 3.88, more or less unchanged from last week, but I think again you will see an increase in the 10-year treasury yield. And usually when this go up, we see that the markets go down. It's one of these steady indicators that we mentioned all year. So the fundamental picture is somewhat steady, I would say slightly negative, but steady. What about the technical picture. And to understand the technical picture, I usually mention a few things. I mention the amount of signals, and then I show you the chart with some reasoning. And looking at the signals, because at StockInvest.us we analyze more than 30,000 tickers, 27,000 of these are qualified for signal analysis. And last week, all signals all over the stocks that we analyzed said that only 12% held a buy signal. That was extremely low, and as I told you, when it's this low, usually market go up, but it's also the place where markets are very volatile and can fall very hard. This week the amount of buy signals is at 16, it's still very low, so we're still at the same place where you can expect very volatile markets. Going to Nasdaq is only 10%, New York Stock Exchange 11%, and London 11%, slightly up from last week, but all still very low. Tokyo at 23 is up quite okay since last week. It was 13% last week, so it had a nice jump in Tokyo, while Shenzhen, China is still at 5%. Overall, these signals numbers say the same thing. In general, they give reasoning to believe that we are heading for green markets. At the same time, when they are this low, it only takes a small thing to get into a very frantic selling market. And if you look at the chart, because that will be how we will conclude this session. You can do this yourself by going to StockInvest.us and type in the ticker Exig or look at any chart. Nasdaq is within a falling trend, and you can expect it to continue within the falling trend. There is two things that you should look at when you look at the chart, and for those who are listening to this on Spotify or wherever you are, right now Nasdaq is at the bottom of the falling trend, and usually that indicates a possible upturn. At the same time, Nasdaq is at the support level at 10,600, and if broken, there is no really good support. There is a little support from the trend lines, but other than that, there is really no good support below. And if broken, that indicates that the market can fall very, very hard. You can see an instant drop 700 points, maybe even more. And I think, personally, I believe that if 10,500 is broken, it will be 8,000, which is signaled much earlier this year. If markets go up, let's hope they do, we get a double bottom and market starts to push up, well then it faces a lot of resistance upwards. First at 10,800, later 11,200, and from that point on up to 16,000 is just an enormous amount of resistance. So there's nothing in the chart indicating that things will go very fast if markets turn up. The only thing that can break this is fundamental news, because if we get a peace agreement in Ukraine or other reasons why the conflict will end, market can, because they are quite oversold as is, move very fast upward. But unless we have these news, it should be a long way to get back to 16,000, which is previous high for Nasdaq. For the week ahead of us, I think that Nasdaq will test the support at 10,600. I think it will be broken down. I think Nasdaq will fall below 10,500 and fall even faster. It might bounce up a bit, maybe try 10,800 before deciding to go down. We will just have to see how it moves. Relative strength index is 33, and market is not oversold. It's low, but not oversold. So there is no support to gain from an oversold market. If, as I said, if it turns up, will be too much resistance. So the best case scenario is a slow but green week. The worst case scenario is a very red week. Last week I thought we could head for a crash. I will still remain negative to markets. Not sure if we'll have a crash. We will have to have these combinations of extremely bad news, especially from Ukraine, for that to happen. All in all, sadly a new red week is expected. Hopefully I will be wrong like I was last week, as we ended in green last week. Anyway, trades can be made, and we will have a quick look at possible trading candidates for the week ahead of us. Last week I told you I would not give you any new tickers, but I did say that you should have a look into cruise line business, and if you did follow that tip, well, the cruise line went very well last week. Royal Caribbean, Norwegian Cruise Line, etc., all of them were up between 10 and 20% last week, despite that very bad Friday. Is cruise line still a buy? No, I don't think so, because they took out that huge potential last week. But last week we had the three open trades, Somerica, Fast ZOM and Chevron. And how did that go? Well, Somerica is still open at 0.20 cents. It's down 22% since it was bought back in week 34. So it was a slow, meaningless week for Somerica, no gains. The stock still remains open in the portfolio. And if you wonder, should I buy Somerica now? Well, it's a high risk stock. You should only play with money that you are able to lose. We've been doing a lot of Somerica trading in this portfolio. All of them have been successful, but so far we have been waiting 6 weeks for the last trade to go in green. Hammering in red week's been very hard for Somerica, and it might just be a very slow week ahead of us. But when the markets turn, or for some reason Somerica push some news, you can expect Somerica to move very, very fast. Somerica, as I said, remains open in the portfolio, but didn't have any special good week last week. The other two companies that we opened was Fast ZOM and Chevron, and Fast ZOM, well, bought in week 39 at 47.30. Had a slow week in 39. Then last week, yet another slow week, was up at 83, but Friday was brutal and was cut by stop loss at 47.14, given a loss of 0.34. So Fast ZOM is out, it's sold, it's one of these few stocks that we had to sell with stop loss, but a very marginal stop loss. The real positive thing last week was Chevron, and Chevron was also bought in week 39 at 141.25. During the week it was all the way up to 163, but fell a little back, currently at 160.03, up 13.3% so far since we got Chevron. Do I think Chevron will continue up? Yes, I think so. It's running on a stop loss, so even whatever, more or less whatever happens, that trade will go in a very nice green if cut by stop loss. But we will see. I believe, as I said, I believe oil will do very good. So what about the week ahead of us? Well, as I said, I think there might be a green week. And since I believe this, I will not go hard in. I will only replace, as we said, Fast ZOM was sold, so I will only replace that with a new stock. And again, I will go for oil, and this time it will be ConocoPhillips. So COP, ConocoPhillips, will be the ticker I will try to trade today. And it's just a very, very short time until markets open, so I really have to speed up in order to get in. I will try to get in as low as I can, and it should usually be then between half an hour to an hour after markets open. We'll see. I'll just follow the ticks as it moves. That was all I had time for today. As I said, it will be a very, very short podcast. Hopefully it will be normal podcast next week. Anyway, I hope you benefit some from the podcast. If you like it, please comment below or hit the like button, or even do both. Until next week, I wish you a very, very good week. I hope you enjoy fall. We are soon heading into winter here in Europe, and it will for sure get colder, so make sure to enjoy these last few days of fall. Until next week, have a beautiful week. I hope you will have a green week, and we will speak. Bye.